Hello and welcome to ETBFSI.com by the Economic Times. My name is Amol Bethe and I'm in conversation with Dr. Debadatta Chand, MD and CEO of Bank of Baroda. So glad to have you on this show.
Thank you very much. Thank you.
So to begin with, I'm sure you must have already answered a question about bad revenue growth a lot of times. So I will just quickly talk about first, margins, corporate credit growth, then industry and perhaps fintech and the future. These are the three topics that I want to discuss with you on a slightly broader level so that my readers and viewers can get a better perspective. To begin with, what I have learned from many other interviews of the bankers and also the analysts is more than 3% margins for the bankers, whether it's private or PSU, is going to be tough. You are already leveling at 2.96. There is some improvement in the margins also this quarter. How do you see the whole, or how would you like to give a guidance specifically from margins from the Bank of Baroda perspective?
Thank you very much for inviting me. And before I go to the margin, let me put a couple of facts before you.
Yes.
One is a case we had a very significant growth in terms of the top line. One of the good part of the top line growth is the sequential growth has been quite strong. Corporate almost 8%, and the MSME sequential is almost 6.5%. Agri and retail almost at 5% sequential growth. So the growth path, the bank is doing well. So one of the key theme while driving the growth of the business model that we want to keep the underwriting tight. At the same time, clearly focus on the margin and then growth. So margin and growth is always a trade-off in that. So the bank, a couple of things again, which again vouch the margin being one of the good number, is that my cost of deposit at 4.91, one of the lowest would have seen in the system. At the same time, there is a positive NII growth. And at the same time, the asset quality has been quite good. So leading to a scenario wherein we are finding margin also something on the top quartile. But in terms of the repricing of asset liability, I mean, many of these asset liability repricing would have happened during the quarter. I mean, I'm talking about the Q2. And the full quarter impact possibly it not have seen. So the next quarter going to be a quarter wherein possibly we'll see the full impact of the asset liability repricing, subject there is no rate cut. In that scenario, our guidance for the next quarter margin is that it is going to be range bound. So range bound in the sense that it can be higher or it can be lower also. At the same time, our estimate that Q4 would be better. I mean, there would be upside. And full year basis will be at somewhere 2.85 to 3 on a global basis.
Okay.
Whereas the domestic NIM, which was at 3.10 in September, that would again move in the same range at least for one quarter, and then we can see some improvement in Q4. But then next quarter we need to watch out.
Okay.
That's why we say very clearly it would be a range bound. So we need to see the real impact on the books before the numbers are computed.
Okay. But that's the total that you see. I mean, we will close the year with 2.85 to, okay, which is on the basis, I mean, which is on average around 3%. Maximum.
No, average it can be it can below 3%.
Yes,
I mean,
yes.
global. See, I run a larger international
Yes,
book.
yes, I'm aware.
So the book is almost 2,20,000, and the margin, although it has improved this quarter,
Yes, yes.
global NIM has improved. But then it is not so like a domestic NIM. So it is somewhere at 1.75 to 1.8 at best.
Certainly, sir.
So then it puts global NIM into on a domestic basis, the range can be around 3. Global basis, it can be 2.85 to 3.
Right. There are mixed views and mixed signs about the corporate growth. While the bankers are saying there is some improvement, when you look at the industry side, either the greenfield or the whitefield capital, still we are seeing a dip into it. Though the corporates have announced a lot of plans. In fact, in the earlier quarters, you had said that the corporates lending has dipped sequentially due to sectors, seasonal factors, and war market shifts. How has been the performance starting from this quarter? Because we have seen some uptick since after what you can say the beginning of this quarter itself. And what is your whole observation specifically about the corporate credit growth?
Look, the corporate credit, this quarter on a YOY scale, we are slightly muted, but on a sequential scale, the growth is almost 8%. And when we speak as on today, we do have a pipeline of almost 40 odd thousand sanctioned, not disbursed, and 25 odd thousand which are under process. So almost a pipeline of 65,000. Another underlying, thing that you can take it is that Q3 and Q4 are normally productive quarters. These are busy season quarters. but the growth normally, the normal working capital borrowers also they increase their, increase their availment. In that scenario, I'm expecting a full year 10 to 11%. There are sectors which are, sectors which are doing quite well. Investment happening on the sectors like other than a normalized investment in many of the sector. A couple of sectors where good investment happening: renewable side, data center side, road project, infra project, the commercial real estate where the buildings are being constructed. So I think there is a whole lot of things getting into the corporate, piece. One thing that happened during the last two quarters, Q1 and Q2, many of the corporate, either because they are cash rich, they have the capex, but they either put out their own internal accrual or fresh equity because the capital market is quite strong. At the same time, on the loan side, they got into bond market and borrowed funds because that is what something linked with the bond market pricing.
Yes.
So the real corporate loan growth in the bank's book may not be true reflection of the private capex happening in the economy. I think the private capex still is quite strong.
Okay.
And taking the bond investment by banks as a credit equivalent, I think if you combine both the numbers, it would still be a good number. So in that way, I think the economy offers good opportunity for a bank like us to grow 10 to 11%. Many of the banks have also a similar experience which you said. So I think full year will be at 10 to 11% corporate loan growth.
Okay, that's meaningful. But can you sir decode for us and explain more on corporate credit growth specifically? What are your observations? Is the demand specifically for fresh loans is very high, where the companies or the industries are going to do capacity addition, expand themselves, or is the demand specifically for the working capital is very high? And the new segments that you specifically spoke about, data center, renewable, are there also you are seeing absolutely a major expansion plans by the industry, or just going slow? How's that part shaping up?
It is so. The sector that I talked about, I think there are fresh investment happening big time. These are all greenfield projects getting added to the economy. And the normal sector, which is particularly the core sector, we have seen the capacity utilization increasing of late in the Q2 at least. That's why the sequential growth is quite high. It's a overall economic piece where things would happen on multiple front, and even many of the core industry they are also adding bit of capacity, which proposals we are getting. So I would see in terms of the growth path, it's something a strong growth in terms of the private capex. So we have to see the numbers at a later time. But I think the because of a beautiful economic scenario, things are quite positive. But I think banks lending to the corporate, suppose all the banks together, if you add the credit and credit equivalent substitute as a percentage, I think the number would be far higher.
When you said more than 40,000 crores of sanctioned loans are there, when do you think this will be completed? When do you think that disbursal will happen? And also, will we close the year more than this sanctioned loans, or we'll stick to this?
No, we'll be adding more sanction going forward, but the sanction can be disbursed in Q3 or Q4.
Right.
So obviously, we'd like them to be disbursed because sanctions have been given. There are again on pipelines which are under process. There are more to come. Typically, Q3, Q4, we see the normal working capital borrower, they come for enhancement of their limit. So it's a, full piece of corporate which think, getting a 10 to 11% range, which I'm giving as a guidance. We did it last year also.
Yes.
So I think it's quite achievable this year also.
On the retail side, sir, there is again a rally specifically from the retail side when you look at the loans, whether it's housing loans or the auto loans. The demand is very high. In fact, the loans on the personal sides are also increasing. Do you see that the momentum will continue, or was it only because of some festival seasons or the GST issues where the consumption was very high? Do you see that the retail will, shape up really well the way it is growing? And adding to that, do you see some repricing of the deposits also, because now the rates are again, expectation is the rates will again come down from the RBI side?
Look, on the retail, the market is growing, and why it is so? India's retail debt to GDP is one of the lowest, so there has to be growth in that, and that is what we have seen for last many years.
Right.
We as a bank on the retail piece, retail loan, We have been growing almost 18 to 20% for last many quarters, maybe 3-4 years now. And if you ask me what is the opportunity for the bank for the future year, let me tell you on the retail loan, my normal market share is 5.5-6%. On the retail loan, I am at 4.3. So in terms of our growth objective, we want to be there at 5.5-6% before we think of whether I need to grow at the same pace or I have to slow down. So that's a clear objective. And as far as the market, the asset quality on the retail, these are all as on today in terms of numbers, that are quite well in terms of getting comfort that this is a segment where banks, all the banks, not only we, many of the banks have declared, particularly public sector, they want to go strong on the retail. I think getting into our level of 18 to 20% for the future quarter, I'm quite hopeful that we'll do that.
Okay.
That's something I think having a 8,200 branches with a large branch footprint, I think one of the basic objective is to how to cater to the retail masses.
Okay.
At the same time, the product preference going to be housing, auto, education, and couple of loan against property, maybe retail gold, so that overall on the retail piece, on the asset side, I think we can be at 18 to 20%.
Okay, oh, that's interesting. Thanks for sharing those details. So one interesting question that I have specifically is in last couple of years, the PSU or private, every bank has built and shaped up their fees income or the cross selling part really well. In fact, you also have a partnership with an insurance company. Now, my question is slightly maybe just a thought here. While the GST has been reduced on the insurance, the fees and the cross-sell income is always high for the banks. Now, there is some income that you generate specifically from the insurance companies, but now the insurance companies are saying that we are not going to share, we are going to reduce the cost of the commission to the intermediaries, which you are one of them. And second, the GST cost, they will not burn it. Do you see the impact on the fees income or the cross-sell income going ahead, because you are one of the major promoter and a shareholder of insurance company?
See, on the wealth side, there is not only the insurance side, but there is a mutual fund. We get significant fee out of that. The distribution of mutual fund, our own mutual fund is there, so you get significant income on that. Secondly, big time we are focusing with regard to the fee. Actually, we came out with a concept called fees and flows. So on the fees, there is enough focus on how do you capture the fee. What is happening, the processing fee and all on the loan side was going down, obviously for reason on the competitive market. Then we came out with a product called Baroda Cash Management Service, which we offered to many large corporate, and also now we have gone for a significant MSME penetration. So there the growth happening almost 30-40% on quarter to quarter basis. Actually, there is a significant jump happening because we have captured that piece well. At the same time, I would not say as a bank, but as a group, will be focusing on parabanking services, right? Which can again augment the fee for the group or for the bank. And the insurance piece, these are under discussion, so I will not come to a conclusion at this stage in terms of the intermediary sharing on the impact and all. But the underlying market has significantly improved because of the GST cut.
Yes.
So whether you play a scale business or a volume business, that is what actually we need to decide. Right. So as on today, I don't have a ready impact assessment because of the insurance seat, because things have not been decided so far. But going forward, we will definitely try to compensate if any loss happening because of the insurance business to the bank in terms of the fee, it should come from elsewhere. Yeah. So on an overall piece, we want to focus strongly on the fee waste, the fee part of the bank's income. Rather, as on today, it's almost 7.5% of the total income. I want to be somewhere in the 10 to 11% range. So on a group strategy, as I said, the parabanking can be.
Please explain more about it. I think that sounds interesting, really.
So what I mean to say, there are many areas where the bank not fully, other than the mutual fund or the insurance, not optimize the group scalability. Maybe that is a piece with regard to the broking part, the demat business, the capital market business. Maybe a couple of intermediary role in terms of the retailing in government security. So I think the group, we are working on those strategy, how to group as a whole augment this piece of business, so that as a group we are there in power banking services, which again gives us a full complete universal bank, at the same time being present in every market, which makes a value to us.
Well, that's But have you already started doing that, or
These are all strategy actually. These are, I mean, as a group, we have this is a medium-term strategy to how to scale up operation on parabanking. At the same time, working strongly on our existing distribution channel, both for the mutual fund and the insurance company.
sure?
But without any sacrifice on the focus on the core banking, which has been quite strong as of today.
So one more question specifically on the industry side, then I will move to fintech and then the future of banking specifically for you and also the industry. Every bank today says that the NPAs have been lowered, or there are no bad loans as such, which is obviously the great sign, no doubt about it. But is it also because now the banks have started transferring their NPAs and bad loans to the bad banks or the NARCL?
NASL, my transfer is hardly, I mean, couple of thousand only as on today. So, as a bank, we don't have much of transfer to the NARCL.
Okay.
Look, the asset quality, which is one of the best as on today for the industry, this is on the backdrop of a beautiful the banking and economic scenario prevailing. I mean, we also always say the banks do mimic the economy because the economy has been such a good phase. The this quarter, the slippage out of corporate is only 1 crore because of some interest loading, and the last quarter also it was nil.
Yes.
So it's the overall economic scenario which is making banks to improve their asset quality, not otherwise that I mean banks are doing differently, but it's the asset quality which the system has addressed fully. So that's why it's something good. At the same time, again, when we say that India need to get into mature market scenario, in that way, you need to maintain your asset quality very tight. And the numbers that we are looking into clearly, we are comparable with the global banks on that, whether it is GNPA or net NPA for the matter. So I think, and banks have been, I mean, improving their underwriting standard for last many years now. Right. So these are outcome of many things. One is the banks have strengthened their underwriting capability. At the same time, a excellent or a beautiful banking and economic scenario prevailing for last many years. I mean, our market getting mature, so the bank are mindful of improving these numbers, which may involve kind of a, I mean, the recovery. IBC has been a great support to the banking industry. So in that way, these are multiple policy strategy which implemented. I think that's bearing the outcome there.
Okay. Note your point. So fintech has become one of the integral part of the whole banking community and the banking sector right now. What kind of partnership Bank of Baroda has with fintechs, and how actually fintechs are trying to help you maybe in terms of generating new leads, partnering, setting more products? How's your observations and the outlook specifically for the fintechs?
No, we are quite positive. There are partners therein. So as on today, all our underwriting model, be it for corporate, MSME or the retail, we have made it completely digital. And in all these underwriting application, which we call LLPS, there are multiple fintech interfaces happening in all these LLPS. As on today, my data shows that we have tie up with 50 fintechs as on today. Okay. In terms of sourcing their data, maybe analytics therein, maybe some kind of a I mean, building up a better underwriting model. So we do have an extensive tie-up with fintech now. There are multiple services being availed from this fintech now. So fintech and banks need to work together as a collaborative way, just to because there are many areas where we can't get into and build those models. Yes. Fintechs have their right skill to build those models. So I think it's a very collaborative approach to partner with fintech, and I think going forward also I think there is a significant collaboration can happen. I just give you a point that we created a company called Baroda Sun Technology Limited that last year, and this company is supposed to invest into emerging technology, including partnership with fintech, to create value for the bank. One fundamental aspect that we have been focusing tech is that how tech can bring the process efficiency. There are multiple processes within the bank which again would require a bit of more, what you can say, because I want to reduce my cost to income ratio. Yes. So there again, I think the BSTL, they can have separate set of partnership, can bring a lot of value in creating into those technology or those applications which would create a delta for the bank, for the parent. Exclusively, this company is going to serve the parent only. So these are the initiative I think we are doing so that we create value and ultimately we reduce the cost to income ratio. That's very fundamental. I tell you one scenario. Uh, Maybe 3 or 5 year, 10 years down the line. Although on the margin side, that's the main point of discussion. We are one of the highest. Will continue to maintain our margin. Our margin guidance or the margin numbers. But more you get into a mature market, banks need to operate at a lower margin.
Right.
That happened globally because my global NIM is 1.75.
Yes.
I mean, the international NIM is 1.75 and domestic is 3.10.
Okay. Okay.
So that's a churn going to happen maybe in a long term.
Okay.
So the only way we maintain your ROA is to reduce your cost to income ratio. And we as a bank, as a strategy, we have been quite focused to work on the cost to income ratio.
Okay.
There are some positive, there are some still we need to work a lot, and I think there the fintech can play a big role there.
Okay. That is truly meaningful. I mean, extremely meaningful in terms of, I mean, wasn't aware. So you are saying that as you become more powerful, become a more global bank and borrowing from the global banks, your margins come down. Okay. So, okay. Then you are heading in the right direction. Noted your point, sir. When you spoke about global, my last two questions. One is specifically, the government is also thinking since really long time that why India doesn't have a bank which can match with the global standards. And maybe if you have to reach there, PSU banks can push themselves a lot. How do you see yourself maybe, because you already have a strong global presence than many of your peers, how do you see maybe heading towards that category?
See, there are two strategies as on today on an
Yes.
organic basis. One is that my domestic book need to grow at a rate that we are talking about. We had one of the good quarter, and we need to replicate this the numbers for future quarters that can bring a domestic scale. Internationally, also after slightly, although the business doubled in 4.5 years, but number of branches we reduce in the process, right? We want to strengthen, consolidate, and then grow. So the growth is coming quite good. So in terms of international scale, which is almost at 16-17% as on today on the global book, I think we are targeting somewhere 20 plus in 2 to 3 years time. That may come in terms of putting more resources, scaling up those businesses, or also can get into a bit of expansion mode also. So because we have a significant international book in the overall book, our strategy is to grow in both domestic and also in international.
Okay.
So currently my global ranking is somewhere 133. So although things are highly competitive, but we wish that we need to get into the top 100 at least on an organic scale, organic basis.
That's a good aim, but any timeline?
There's no timeline because globally, I say other banks also would improve in the process, and all Indian banks are improving, global banks are improving. But we have bit of, then only once you have a roadmap, then only you can work on those roadmaps. So these are all strategy, long-term future mission. I can't give you timelines, but we are working on those.
No, certainly, I think that is still a better statement. So interestingly, we have seen major changes in last 1 month itself, or last 1 quarter maximum, in the private banking space in India, where the foreign players are coming, investing heavily. We have seen Yes Bank, we have seen RBL Bank. In fact, RBL Bank is quietly astonishing because 60% stake. So the underlying story I want to learn from you is, do you see the interesting aspect of the Indian banking now is we are also luring and attracting the global investors? And do you see the global investors from all over the world are going to enter in India quite aggressively, specifically in the banking space? And how do you see the whole this space after foreign interest playing in India will shape up? What are your observations? Maybe not a straightforward question, but
I think it's a welcome development for the matter. As far as Indian banking is concerned, it's not that API are only coming through this route.
right.
Bank like us, the holding is almost 10%.
Yeah.
Now the banks were higher than 10%. So they are already there in the Indian banking. Whether taking a significant stake, couple of transactions that you are referring. So I think it's a welcome step, welcome development. At the same time, I think the market is going to be competitive.
Yes.
Because we need to, and the underlying, I'll not say challenge, the underlying preparedness that the banks like us need to do is to how to manage the cost to income ratio.
Okay.
I mean, that's something fundamental in terms of making you competitive, create your size, scale. Once you have a control on this, possibly you can also add significant scale, compete with the global best. We are operating in many of the global territory, which are again advanced economies and competing with those banks. So I think it's a welcome development, and this making the Indian market more mature, banking market more mature.
Right. So you gave your guidance on corporate growth, your numbers, margins. Just last one question, maybe, when you can take your time, as low as high. uh, what can go right for Indian banks hereafter, and what can go wrong?
See, the Indian banks need to leverage on the strength they have created in last many years, right? So it's all the banks having all positive numbers, and again I said this is because of the underlying very good economic and banking scenario prevailing in the country, right? We are one of the fastest growing countries as on today. We have an ambition of getting Viksit Bharat by 2047. So to Viksit Bharat, I think huge investment required to create the economy, and the banks are going to anchor it. Right? So that's something critical. So we need to leverage our strength now to create scale, size, efficiency, so as to compete with the global best. This is one. Couple of things we need to be mindful while growing is that look, the geopolitical scenario is also the full impact we have not seen. It is only a discussion happening because the impact would be seen maybe a quarter from now or maybe 2 quarters from now in terms of real financial that we normally capture. The global geopolitical normally disrupt the supply chain. That's also a big impact. So all these things we should be mindful while thinking what we can be there maybe a quarter or 2 quarters. So in terms of our working, we need to be conservative in terms of seeing through the impacts and then preparing ourselves for that. There can be negatives on that. The second aspect which Indian banks were working very very strongly is to how do you handle the cyber security piece, because cyber security not at the bank level, maybe at customer level, some of the incident that we hear on the digital fraud, the digital arrest and all those things, that slightly we banks need to create those awareness for such incident not to happen. Banks are doing great in terms of sensitizing. Our regulator itself is pushing this sensitization program big time. We have all been doing that, but that typically to bring confidence on the customer to use digital as a platform for their banking, I think we need to address this. We are one bank along with the largest bank, SBI, anchor creation of an entity that came on newspaper. Yes. So I think a lot of development happening, but then on a day-to-day basis, banks need to be mindful with regard to the threat of cybersecurity.
True, sir. That's a concerning area, but thank you so much for sharing those outlook insights specifically on what is happening in banking, but also what may happen and specifically your vision about your bank. Thank you so much for your time and sharing those thoughts with us. Thank you so much.
Thank you. Pleasure interacting. Thank you.
Thank you, and thank you so much for watching this show. Thank you.